On today's podcast, we're going to be looking at the stock market. The stock market is really important to understand because it gives you the ability to actually make money when you are not physically there or without you being physically involved. So it is a form of passive income that you can actually make up, a form of passive investment. Now, in order really to understand this, we need to look at several simple things. As always, we're going to keep it basic. We are going to start looking at what really this actual stock market is. Okay, so a stock really is just a small piece of ownership in a company. So a company can be made up of, for instance, let me just use pie. Okay, so if this is pie, this company can be broken down into several things. Okay, now these smaller parts or smaller portions of this pie is actually what you call shares. Okay, now the quantity of these shares are or is what you refer to as a share. The ownership is what you call a stock. Okay, so a stock is just a small piece of ownership of a larger part of which you are calling a company. Okay, then a market obviously is a place where you can buy and sell goods and services. Now, in this instance, it's a digital market. It can be physical or digital market. Now, when you look at the stock market, it's a digital market where you can buy or sell stocks. Okay, so now we are caught up on the definition. The question should come is, how can actually a company or how can an individual be able to buy these shares? First thing is that you need to have actually listed companies. Okay, now I know you've heard about the S&P 500 if you're in the US. Those are like the 500 largest companies in the US. There are several ways or there are several listings that are there. In Zambia here, we're looking at the Lusaka Stock Exchange or the London Stock Exchange, right? So the company needs to be listed amongst those indices. So those are what you are calling listed companies. These are publicly traded companies, meaning the individuals of the public can actually buy and sell these shares. Okay, so let's look at Zambif, for instance. This is a Zambia company. Zambif at its initial, so IPO stands for initial public offering. It had its initial IPO in 2003. So in 2003, Zambif decided to go public to say, okay, we need revenue, we need to increase the growth of the company. So they decided to go public in 2003. They put up a number of shares. Okay, those shares are not necessarily disclosed to the public. If you want to have more information about that, you can actually just maybe contact Zambif or you look at the archives. But let's just take it for instance. Zambif put up shares, an amount of shares publicly. How does it do that? Like, what's the process? So the process is Zambif as a company, they're going to sit down through a memorandum of association. They're going to come up with both the number of shares or the number of stocks and the amount assigned to each individual stock. So, for instance, we're just giving this as an example. If we say Zambif has 500 million shares as a company, and they decide, okay, we're going to put up 3 million shares that can be publicly traded. So the 3 million shares can be publicly traded. They have remained with the 2 million shares. Now those remaining shares, they are actually just amongst the founders and the initial investors of Zambia. Okay, so these 300 shares, they have been put for buying and selling on the stock exchange. So let's say the Osaka Stock Exchange. So in 2003, it was put on the Osaka Stock Exchange, and in 2011, they actually put it also on the London Exchange. So now it had like a dual listing, meaning now even people who are not in Zambia can actually buy on it, which is something you should know about. So the market, despite it being digital, can actually be limited to region, even state. Okay, so let's, for instance, the Osaka Stock Exchange is just for Zambia. Okay, you can't necessarily buy and sell if you're not Zambian. Okay, unless obviously you are now buying and selling of company shares of companies that are in Zambia through an international listing in this. For instance, if you're looking at the London Stock Exchange. Okay, so these 3 million shares that Zambia had put publicly, we are saying they assign it to say, okay, each share is going to be costing, let's say, a 2 kwacha 13 ingwe. Okay, for easy math, let's just put it at 2 kwacha, right? Now I use this value 2 kwacha because in the beginning of the year, which is 2025, Zambeef actually had the initial value for each share buying and selling was at 2 kwacha 13 ngwe. Okay, now right now this is the end of June. Zambeef has gone to 3 kwacha. Okay, so now let's get back. We are saying individual shares are going to be sold at 2 kwacha. So the 2 kwacha multiplied by 300 million shares, that would be what the market value for that company, which is Zambeef, is. Okay, now it's not the total, because the net worth we should also include the 200 that is not yet publicly listed. Okay, now you might ask, but okay, why have they just put some aside? So they can actually now put these again if they actually wanted to. If they wanted to increase the number of shares, they can actually increase. For instance, Apple right now is about 15 billion shares. Okay, so there is actually no limit. Okay, the only thing that is going to be limiting is just actually the laws of that company. For instance, now we're talking about Zambeef. Okay, so here we are saying in the IPO, Zambeef was trading at, or Zambeef stock was trading at 2 kwacha. Now it has increased the value to 3 kwacha. Okay, so there is a gain. Okay, for those who bought when it was at 2 kwacha, they have now gained a 1 kwacha plus. Okay, now we are going to talk about how all this is going to affect you as an individual who's buying and selling in the next video. So please stick around to actually look at that. Now, as an individual, how would you be able to buy these stocks or these shares from Zambeef? Okay, you need to undergo or to go through what you call a brokerage firm. Okay, so meaning you need to open an account with this firm, and there are several firms, even in Zambia, that when you open, they are going to use what you call stock brokers. Now, I know you have read about stock brokers, right? If you have seen so many movies, if you have seen the series Billions, if you have seen movies like The Wolf of Wall Street, right? We have all seen that movie, or at least you should see it. You see that there are trade brokers there. Now, those brokers are the ones that are going to be buying and selling the stocks on your behalf. Hence, this is a passive thing. So you can be at work, you have opened an account with a brokerage firm, you have put in money, you have told them to say, okay, I want to buy these stocks, and I'm going to be only spending this much money on these stocks. Okay, now the company, which is the brokerage firm, using a broker, they are going to actually buy for you those shares, or they are going to sell for you those shares. Now, when you buy something, obviously you are increasing the value, or you are anticipating to say, okay, this thing is going to increase in value. So buying of shares from a company actually increases the value of those shares, and inevitably also increasing the worth of the company. Okay, and obviously selling now, it means people are losing faith in that company. They are selling, they want to get rid of those shares. They don't want to actually make a loss, because as much as it has increased from 2 kwacha to 3 kwacha, it can also undergo a negative change, meaning it can also go from 2 kwacha, it can maybe be at 15 ngwe. Let's just say if it went to 15 ngwe, meaning if you bought it 2 kwacha, you would have made a loss, right? So people can start selling when they think, okay, Zambeef is about to start losing its values, the shares are not, the company is not doing well, or maybe they have changed administration, the leadership is not, is not that enticing, and you think, okay, we need to actually sell these shares because this company is going to be run down. So they can change as such. Okay. That is why the stock market is an anticipatory market, meaning the brokers and the brokerage firms, the members, they anticipate in the future what is going to happen. Okay, so for instance, in Zambia, we had power shortages. We're still having power shortages. Okay, you would anticipate as a broker to say, okay, Zambeef can actually increase in value, for the fact that one of the things Zambeef is known for is that it's a big company in Zambia, which is going to provide you with your daily meat and other daily products, meaning it's actually going to give you, despite having power shortages, you are going to have proper food when you buy from Zambeef. Okay, which would be a bit different from these other local butcheries, because without power, their fridges are not working as much, or they can't necessarily keep up with either solar or with them just using gensets, standby gensets. But Zambif being a big company, you are thinking, okay, it can do what? It can actually survive and it can give you proper meat. And as such, a lot of people are going to be buying from Zambif. And if a lot of people are buying from Zambif, what is going to happen to Zambif? Its values, its shares, its turnover is going to increase. And by that, also, they are going to increase the value of their shares, right? They are going to increase the value of their shares. And in return, you as a customer, you can actually increase your stock value as well. Okay. Now there are two ways in which that can happen. Either they increase where if you bought the share and you kept it, so you increase it the value, or if Zambif actually decides to give you dividends. We are going to go into details about that in the next video. So this is actually what it means to buy and sell from the stock exchange. If you have any questions, leave it in the comment section. I'll be willing to answer them. And please subscribe. Be on the lookout for the next videos that are going to come up. This week, we're just going to be looking at the stock exchange, and I'll be breaking it down as basic as possible until we go into an advanced video that I'm going to put at the end of the week. So thank you very much. Give a thumbs up, and obviously, as always, peace.